Hey everyone, welcome back to Corporate Decoder, the place where we take the most boring corporate documents and find the juicy bits. Today we are diving into VSEE Health Incorporated's latest report, and let me tell you, it has some interesting financial maneuvers. Before we start, if you love getting unfiltered insights from these filings, make sure you are subscribed. And hey, we have a growing Discord community where we break down these things even further. Link in the description below. Now, VSEE Health Incorporated has filed a Form 8K, which is basically a report for really important events. This filing is about a recent agreement they entered into. It seems like they are raising some funds and securing their financial future. The core of this report is about VSEE signing what is called a note purchase agreement. Think of it like a lending deal. They sold a secured note, which is essentially an IOU that is backed by some of their assets for an amount of about $133,333. But here's the key detail. They got almost $120,000 for it. This means they sold it at a discount, and that is a common strategy to make the deal more attractive to investors. This note carries an interest rate of 5% per year and is due in May of 2026. It is not convertible, meaning it won't turn into stock. However, there are some serious penalties if VSEE defaults. The interest rate could jump up to a maximum of 24% per year or whatever the law allows, whichever is less. That is a pretty steep climb, so it clearly signals that this debt is a high priority for VSEE to manage. On top of this note purchase, VSEE also entered into an amendment agreement. This means they are tweaking existing deals. They are essentially updating their security agreements and guarantees, which are promises to repay debts to include this new note. This all boils down to ensuring that this new note is fully secured. This is important because it means if VSEE can't pay, the investor has a claim on the company's and its subsidiaries' assets. This gives the investor a lot of confidence that they will get their money back. They want to make sure their investment is protected. Now, what does this all mean for VSEE Health Incorporated? They are bringing in new funds through debt. This is a way to fund operations, growth, or maybe to cover existing obligations without diluting their stock too much, which is when issuing more shares can decrease the value of existing shares. They also have warrants out there, which are like options that give people the right to buy their stock at a set price. In this case, it is $11.5 per S-share. This filing doesn't directly impact those warrants, but it is good to know they exist as part of VSEE's capital structure. Looking at the bigger picture, VSEE Health is a company operating in the health tech space. They are listed on the Nasdaq, which is a major stock exchange. The fact that they are issuing secured debt suggests they might be in a growth phase or a situation where they need capital. But perhaps share issuance is not the preferred route at this moment. It is also interesting to note that VSEE identifies as an emerging growth company. This means they are a younger company and are allowed to follow some less stringent reporting rules compared to larger, more established companies. This often allows them to focus more on growth and innovation rather than extensive compliance. The filings list several exhibits, including the form of the note, the amendment to security agreements, and the note purchase agreement itself. These are the official documents that spell out all the nitty-gritty details of the deal. They are crucial for anyone who wants to dive even deeper. So, what is my take on this? VSEE Health is actively managing its financing. They are securing funds through debt with collateral, which indicates a strategic move to gain capital while maintaining a level of control over their equity. The terms seem standard for this type of transaction, with the potential for higher interest rates if things go south. The key is whether this new capital will fuel significant growth or address pressing operational needs. The company's status as an emerging growth company also plays a role in how these financial strategies unfold. The focus here is on ensuring stability and securing the resources needed for future development. Without seeing their full financial statements, it is hard to say definitively, but this debt issuance suggests they are making deliberate choices to manage their financial trajectory. What do you think about VSEE Health's latest financial maneuver? Does this feel like smart growth or a sign of pressure? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. It really helps us out. And if you want more of these corporate deep dives, make sure you subscribe. Don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and I'll see you in the next one.